Hey fellow stock guardians, happy Monday, August 9th, 2021. I'm Hora, a stock card CEO, reporting to you from a mixed stock market. Today I covered the falling oil prices and its effect on the market indices. I also looked into DraftKings and its plans to purchase Golden Nugget Online Gaming. Finally, I dug into Axsome Therapeutics, 45% price dip today. Let's get right into it. The market indices ended the day mixed. The S&P 500 and the Dow Jones indices both took a dip into the red by the end of the day, while the Nasdaq index began the week with some gains. This tough start to the week is partly due to oil prices slipping more than 2% over the course of the day. This was evident by the West Texas Intermediate price. In addition to oil prices, the COVID Delta variant continues to trouble the world economy and investor sentiment is impacted by it. Before we dive into the winners and losers, let me thank you for being a stock guardian. Our team at StockCard appreciates you watching, listening to, and reading the daily roll episodes. And more importantly, we thank you for using a StockCard platform in your research. Thank you for being a stock guardian. If you aren't a user yet, I'd like to invite you to try now. First, hit the like button, subscribe to the show, and then create a free account on stockcard.io. Thanks for becoming a new stock guardian. On the top of the winners list on StockCard, Golden Nugget Online Gaming, ticker GNOG, stock is up 50% after announcing that it was being bought by DraftKings, ticker DKNG. It seems the Golden Nuggets acquisition is a good deal for DraftKings due to its 5 million users and its online gaming market, which includes online casino and sports betting. Gambling and more recently sports betting in the United States have been on the rise for years. The pandemic brought gambling revenue to its lowest since 2003, only reaching $30 billion. DraftKings will benefit from the resurgence of gambling as it expands its coverage and user base. In Friday's earnings report, DraftKings shared its 320% revenue growth since the second quarter last year. The company is live in 12 states that make up 25% of the country's population. This still leaves plenty of room to grow. And as acquisitions and legislation proceed, DraftKings is positioned to expand. Looking at DraftKings' stock card, what bothers me is its negative free cash flow, which could be an indicator that the company is still trying to figure out how to make money with its core business. I'd like to keep monitoring DraftKings to see more stability in its operations. But DraftKings isn't the only game in town. Type in gambling in the search bar on StockCard, or take a look at the themes and collections DraftKings belongs to and the watch list of 65 companies in the gambling collections appear. Better yet, create a new filter, then just add gambling and no cash concerns. There are about 9 stocks on that list. Let me save it and give you a link to this watch list I just created in the show notes. I noticed a company I didn't recognize on top of a StockCard's losers list today. It's Axsome Therapeutics, ticker AXSM. I got curious to see what could cause the stock to drop 45% in one day. It seems it's a pharma stock that announced regulatory setbacks with the FDA on its major depressive disorder drug. This made it clear for me why the stock dropped that much. Yet again, the market is reacting to clinical trial news. So is this buying the dip opportunity? Let's find out. Axsome Therapeutics is a clinical stage biopharmaceutical company. In today's earnings report, the company announced that the FDA had halted the approval process of its major depressive disorder treatment, AXS-05, because of deficiencies in the drug's regulatory application. The CEO admitted that this could likely delay the eventual approval of drug. Leading up to this, AXS-05 has been delivering great results in phase 2 trials. Axsome share price has fallen quite a way since its January high, losing nearly half of its value even before today's nosedive. This sudden drop in price is very characteristic of pharmaceutical companies that are in clinical trial stages. The most important question is whether it has enough cash to keep going. The company stated in today's report that its cash reserves are enough to keep it afloat through the potential commercial launch of AXS-05 in MDD and AXS-07 in migraine, or at least until 2024. The company also has other treatments in the pipeline. Looking at the company's stock card, while investor sentiment may be very poor, the analyst consensus is to buy. The knee-jerk reaction that today's setbacks brought seems to be a great opportunity to pick some shares at a discount if you can tolerate volatility and possible additional delays in the drug's approval, if any. You never know when a drug is approved, so this is indeed a risky bet. Folks, the stock card partner Joseph Hogue from Let's Talk Money channel has a new video and stock recommendations to buy in August. This month's portfolio review is quite cool because he has invited his community to come up with ideas. I quite enjoyed the video and got at least one good idea to add to my own portfolio. Watch Joseph's video and make sure to follow his Bowtie Nation portfolio on StockCard to get notified when he adds companies to the list. That's it for today. If you haven't already done so, please give StockCard a try, research as many stocks and ETFs as you want, and consider following a few successful investors by visiting the stock picks page on the StockCard platform. Like Joseph Hogue, don't forget to sign up for a 14-day free trial with promo code ROLLWITHOURCEO, all lowercase and in one word, and like, subscribe, and share these daily market recap reports with your fellow investors. Come back tomorrow for another market recap report. See you then.